They are calling it Operation Epic Fury, and while the world is fixated on the smoking ruins of the Iranian command structure, the most dangerous explosion isn't happening on a battlefield. It's happening in the silver vaults. Right now, as the US and Israel confirm the elimination of the supreme leader and Iranian state media declares 40 days of mourning, the physical silver market is officially breaking. While the paper spot price is consolidating around $92, the real-world premium in the East has hit a staggering $15 spread. We are witnessing a 6-year structural deficit collide with the death of a major oil power, and the smart money isn't waiting for the COMEX to catch up. Today, we are breaking down why this 25% pullback is the ultimate institutional trap, and how the 58-to-1 gold-to-silver ratio is currently a ticking time bomb that could send silver screaming toward a $385 mathematical reality. I'm recording this on Tuesday, March 4th, New York time. Comment your date below so I can see where you're watching from. If you value this work, subscribe and comment George Williams. It really helps me keep bringing you this level of analysis every single day. Let's get straight into it because there is a lot to unpack. US and Israeli forces have carried out military strikes inside Iran. We're not talking about small skirmishes or diplomatic posturing. We're talking about strikes that have hit hospitals, schools, civilian infrastructure. Hundreds of people have been killed. The images coming out are devastating, and the geopolitical shockwaves are being felt across every single financial market on the planet right now. And when the world gets this frightening, this unstable, this unpredictable, money moves. Fast. And a significant chunk of that money moves into one place: precious metals. Specifically, it moves into gold and silver. Now here's what you need to understand before we go any further. Silver is not just a shiny metal people collect. Silver is a financial weapon. It is simultaneously a safe haven asset that people run to during crisis and a critical industrial metal that the modern world cannot function without. That dual identity is exactly why what's happening in the Middle East right now is not just a humanitarian tragedy. It is a market-moving event with direct implications for your portfolio. And I'm going to walk you through every piece of it. Let's start with where silver is sitting right now. As of today, silver is consolidating between $89 and $94 per ounce. Now I know what some of you are thinking. That sounds low compared to where it was. And you're right, because on January 29, 2026, silver hit an all-time high of $121.67 per ounce. Let that sink in. An all-time high. And since that peak, silver has pulled back roughly 25%. So the question every investor is asking right now is simple. Is this a panic moment, or is this the opportunity of the year? Here's my honest answer. A 25% pullback from an all-time high in silver is not unusual. Silver is volatile by nature. It moves hard in both directions. But when you look at the fundamentals sitting underneath this market, and I'm going to show you exactly what those fundamentals are, that pullback starts to look a lot less like a warning sign and a lot more like a gift. And the Iran situation may be the spark that lights the next leg higher. Before I tell you what happens next, and trust me, you want to stay for that part because the 3 scenarios I'm going to lay out will completely change how you think about silver. Let me give you the full picture of why silver was already primed for a massive move even before a single missile was fired. Look at gold first. Gold has surged past $5,400 per ounce. That is an extraordinary number. A year ago, people thought $3,000 gold was ambitious. Now we've blown past $5,000 and touched $5,589 at the high. Why does this matter for silver? Because gold and silver move together. They are linked by something called the gold-to-silver ratio, which tells you how many ounces of silver it takes to buy 1 ounce of gold. Historically, during the most explosive silver rallies, like the Hunt Brothers era in 1980, that ratio compressed all the way down to 14-to-1. Even the 2011 silver peak saw the ratio hit 32-to-1. Right now, with gold at $5,400 and silver at $92, that ratio sits around 58-to-1. If that ratio compresses even to 32-to-1, which has happened before, silver would need to trade at $168 per ounce. If it compresses to the 1980 extreme of 14-to-1, you're looking at silver above $385. I'm not saying that's guaranteed. I'm saying the math is real, and smart money knows it. Now layer on top of that the supply and demand picture, because this is where it gets genuinely alarming. The silver market has been running a supply deficit for 6 consecutive years. 6 years in a row where the world has consumed more silver than it has produced. That is not a short-term blip. That is a structural crisis quietly building beneath the surface. And the demand side is not slowing down. It is accelerating. Here's something that might surprise you. Only about 40% of silver demand comes from investors and jewelry. The other 60%, the majority, comes from industry. Think solar panels. Think electric vehicles. Think artificial intelligence data centers packed with servers that need silver-coated components to function. In 2025 alone, EV-related silver demand jumped 20% as automakers packed more sensors, more wiring, more electronics into every vehicle rolling off the production line. Solar panels are now consuming 25% of the entire global silver supply every single year. And as governments around the world pour trillions into green energy infrastructure, that number is only going one direction: up. Now add the geopolitical layer. Russia, yes, Russia, has become the first major central bank in the modern era to openly accumulate silver as a reserve asset. They have a $535 million silver accumulation plan underway right now. When a central bank, a government, decides that silver belongs in its national reserves, that is not a small signal. That is a statement about where the smart, long-term money thinks this metal is headed. What are the big banks saying? Bank of America has put out a price target range of $135 to $309 per ounce for silver in 2026. Their top-of-range target, $309, is based on the historical gold-to-silver ratio compression I just described. Citi has a $150 target. These are not fringe analysts. These are some of the largest financial institutions on Earth. Now, to be fair, JP Morgan is more conservative, forecasting an average silver price of $81 per ounce for 2026. But here's the thing. Even JP Morgan's $81 average would represent a massive market compared to where silver was just 2 years ago. And it is already below where silver is trading today. Which means even the bears at JP Morgan are not calling for a crash. They're calling for a consolidation. The bulls are calling for a moonshot. There's one more data point you need before we talk about what happens next, and it involves the SLV ETF, the iShares Silver Trust. This is the largest silver exchange-traded fund in the world, sitting on $46.2 billion in assets under management. Millions of investors use SLV to get silver exposure without holding physical metal. Right now, the put-call ratio for SLV's March futures is sitting at 0.92. In plain English, that means investors are buying almost as many bearish bets as bullish bets. The extreme euphoria from January has cooled. The market is cautious, uncertain, balanced. And in financial markets, when positioning gets this neutral after a big move, it often sets the stage for a violent breakout in one direction. The question is which way it goes. And that brings us to the Iran situation, and what happens next. Here is the bullish case, and right now with missiles in the air, this is the scenario gaining the most momentum. If the US-Israel conflict with Iran escalates further, and given the strikes on civilian infrastructure, the risk of escalation is very real. Safe haven demand for silver explodes. We've seen this pattern before. Every major geopolitical shock in the past 2 decades has sent precious metals surging within days. Silver would punch back through $100 resistance first. A confirmed close above $100 opens the door to a retest of $117 to $120, and from there, the all-time high at $121.67 comes back into play quickly. Layer in the Federal Reserve cutting interest rates, which many analysts expect in the second half of 2026, and you have a perfect cocktail for silver. Lower rates weaken the dollar, and a weaker dollar makes silver cheaper for the rest of the world to buy, which drives demand higher. Combine that with the ongoing 6-year supply deficit, accelerating industrial demand from EVs and solar, and Russia buying silver at the sovereign level, and the bullish case for silver going to $135 or higher this year becomes very easy to construct. The Iran escalation could be the match that ignites a powder keg that was already fully loaded. Now let me give you the bearish case because I'd be doing you a disservice if I only told you what you want to hear. The biggest risk to silver right now is a swift de-escalation. If Iran and the US reach a ceasefire agreement, or if diplomatic backchannels in Vienna produce a surprise deal, the fear premium in precious metals evaporates almost instantly. We could see silver drop from $92 back toward the $70 support level, and $70 has been tested multiple times and has held. But in a true risk-off reversal, it could crack. A strengthening US dollar would compound the sell-off, because a strong dollar makes silver more expensive internationally and kills demand. There's also the risk of margin liquidation. When silver drops sharply, leveraged investors get forced out of their positions, which creates a cascade of selling that can push prices far below where fundamentals say they should be. Producer forward selling. Mining companies locking in prices at current levels can add to downside pressure. In a worst-case bearish scenario, you could see silver test $55, which is the October 2025 low and where the 200-week moving average sits. That would be painful for anyone who bought near the top, but it would also be, historically speaking, one of the greatest buying opportunities ever recorded. The most likely scenario, what I'd call the base case, is somewhere between these two extremes. Silver grinds sideways between $85 and $100 for the next several weeks. The Iran situation creates volatility, but not a clean directional move immediately. Buyers accumulate on dips to $87 and $88. Sellers cap rallies near $97 and $100. The market digests the all-time high, works off some of the speculative excess from January, and coils tighter and tighter like a spring under pressure. The trigger for the next big move will likely be one of three things: either a dramatic escalation in Iran that sends shockwaves through global markets, a Federal Reserve announcement on interest rates that weakens the dollar meaningfully, or a breaking news story about a major institution, another central bank, a sovereign wealth fund, making a large disclosed silver purchase. When that trigger fires, the spring releases, and the move out of this consolidation range will be swift and significant. So where does this leave you right now? Silver at $89 to $94, down 25% from its all-time high, sitting on 6 years of structural supply deficits, powered by industrial demand that is growing faster than anyone predicted, with geopolitical chaos in the Middle East adding a safe haven premium by the hour, and some of the world's biggest banks telling you it could trade at $135 to $309 per ounce before this year is over. The paper silver versus physical silver spread, where Chinese markets are already pricing silver $10 to $15 higher than the US spot price, tells you something important. Physical demand is real, it is global, and it is not waiting for Wall Street to catch up. The Iran conflict has reminded every investor on Earth why you hold hard assets. Not because war is good, it never is, but because in a world of missiles and uncertainty, silver has been money for thousands of years, and it is not stopping now. So here is what I want you to do right now. Drop your silver price prediction in the comments below. Where do you think silver ends 2026? Above $100? Above $150? Or does it fall back to $70? I read every single comment. Share this video with one person who needs to see this. Someone who is watching what's happening in Iran and wondering what it means for their money. And if you haven't subscribed yet, do it now. Because this story is far from over, and you do not want to miss the next update when it comes.